Yo, what is up, guys? Tonight we are going to have a look at Bitcoin because Bitcoin gave us that incredible run up that we were expecting from that monthly breaker. And in front of me, I have the last hour of the E-mini S&P June contract. Very nice run up. We tapped a little balanced price range that we made earlier today with the CPI. And I mean, look at that. Very nice 50-point run up. So very nice closing hour of the trading day. Let's hop over to Bitcoin because Bitcoin gave that monster run up. Very, very volatile run up that we were expecting from the monthly breaker. Because I notified you guys that that breaker on the monthly was a key level to hold for the bulls, and we got it. And it just went up 34% in a matter of 3 days. 4 days. So very, very, very nice price action. We almost hit the start of the weekly fair value gap, that's over here. And the daily fair value gap, that's over here. We haven't hit it quite yet, but I'm expecting it to hit nevertheless, given the reaction. So this was the initial plan for me last week, where I was looking at the balanced price range that I marked down here on the daily as my key level, which was in line with the monthly breaker. But we didn't really get that initial drop down retracement back up to fill this gap and then move down. Now we pretty much got the rundown first, not stopping. So I missed that short trade. Not bothered, but I did get the long trade on my spot position. So my spot Bitcoin is up like 30%, and I've taken profit now because we took out those equal highs. And we purged the buy side a little bit better right now. So target hit, balanced price range hit, fully hit. We hold it. We hit the monthly breaker as a key level, and it just delivered beautifully. We took out pretty much both sell side liquidity. We took out buy side liquidity, so it has done its job in that regard. Let's see. So this was my first plan from a couple weeks back that I got stopped out eventually because we broke down here. And then I stated, what if this whole range is just similar, you know, like a power of 3 setup? Well, basically we just got it. I mean, this has been quite a power of 3 setup with the accumulation here at the top, with the manipulation going back down, and then last few days distribution back up. So this whole range is just a fractal of what has happened over here. And now the question is, what's going to be next? Are we like here, halting and eventually breaking down, as in, have we pumped up, we took buy side liquidity after sell side liquidity was taken, and now we are just hovering around and eventually dump further? Or are we going to pump further up for a final target? For me, that's at least my plan, because my bullish plan was always to have something like this initially, but we don't really get this structure anymore, because I was looking for that head and shoulders pattern to then pump back up to make this ICT 2022 mentorship model basically, but it has just not given any retracement. So we might need to adjust this plan a little bit. And given how fast it has delivered, like over here, it just pumped up, up and up and up and up, no stopping. So I'm not really expecting to give a huge retracement back down either. I think for now, if I look at the higher time frame, that my target on the weekly is going to be this imbalance for rebalancing the inefficiency on buy side liquidity. So I'm expecting to pump further up and then eventually reach this. We may make a short-term high here on the daily and giving us a little retracement down first and then pump back to it. But that is going to be my plan for now on the higher time frames, because we took out pretty much all range liquidity. So this is now irrelevant. The higher time frame short is something that I'm still considering, because it could just basically be the, let's say, the R pocket, as some may know. Which would be very, very nice, because we would fill this daily fair value gap. We would partially fill at least the weekly fair value gap. And we might have completed a very, very long WXY combination in terms of Elliott waves, with a 3 move up, 3 move down, 5 wave move up. But this might also be a very extended wave 1, or if you can subdivide it in a wave 1, 2, 3 already on the lower time frames, then the final target may be just this 1.236 and 1.34 expansion target of this range. And then we just complete the expanded flat. And if that happens and we really break down lower, then I'm expecting that last wave down go for 10k and maybe lower. But so far it looks bullish given how strong everything is. We should not neglect that. It's a pretty strong move. So this may as well be the low, sure. But if you think a couple steps further ahead of the competition, everyone went bearish over here. And I think everyone is going to be bullish now over here, given how strong everything looks. Same way everything looked very strong over here. Then we ranged for a couple months. Then we had this huge drop down. I believe this was with FTX, with the collapse, which is a news driver and is a element for market makers or smart money to go to such low degree of price in such strong move, making the retail bearish while it's just accumulating long positions, and now it's just basically distributing it back up so they can sell at higher prices. And as I've stated, I went back in my spot positions over here because that was my plan. And I've taken profits by now by at least 50%. And if we reach the daily fair value gap, we also reach the weekly fair value gap. See? The same pivot, the same high. I will close it by 75%. So 50% still running, and I will close another 50% of that amount that it's still running. So I will have closed like 75% if we are here. And if we reach further up and this was actually the low, then I'll just target this huge imbalance on the weekly. But my plan is to go inside this weekly fair value gap. And then eventually, if we see a local shift in structure on the daily, I will probably close out the rest of the position. But until then, bullish move up, so we should respect that. And we should look for opportunities next. So looking on the daily, I'm going to delete this. I'll keep this. This is now irrelevant for me, so I'm going to delete that as well. These are irrelevant for me now as well, because we have taken both sides. Then we still have this higher time frame plan. And I'm going to keep this one. So if we enter this weekly fair value gap, we may have that 1, 2, 3, large 4, last 5 wave down. So I'm going to keep this. This I am going to hold for now, but I'm not going to be using this. I'm not going to be using this because the structure has changed. But I am going to keep this. Really, if you look at this as an inverse head and shoulder and expecting a huge run up, I would say this is a very shallow right shoulder if you think in terms of retail patterns. I would say it might just fall back first again by either taking that low or at least 50% of this wick, which is a huge rejection block. Almost $2,500. So if it wants to form a better right shoulder first before going up with that huge run, then I'm expecting it to reverse back and go in this rejection block to find support. And basically just consolidate a little bit here with maybe a spike down and then another run up. So I'm going to keep this just in the background to monitor it, but it's not my leading thing for now. And this is the old plan that we had, but I'm going to delete it as well because it's now irrelevant. So what's next? Well, first we have a very nice pivot. We have another nice pivot lower with a daily swing low to keep in mind. So this is now our operating range. And we have a very nice reaction after taking this buy side liquidity. So that's taken. This is now taken. And in terms of dealing range theory, where we have a low, we have a high, we first take the low, then we expect a run up to the high. This makes it now a new dealing range. with our current low and our current high. And by the looks of it, we are rejecting very strong because it already created a wick of $1,600. So it has a very strong reaction. I think a lot of stop losses have been hit when we purged above it. So this is now our range. I want to know where's the equilibrium. That's here. So here we have an equilibrium. We have a bullish breaker. And I'm going to use the wicks because we don't really have that well-defined body. So I'm going to use the wicks with it. And what I like about this breaker is below the equilibrium, we still have this part of the daily fair value gap that has formed due to the displacement up. And this whole section is an order block. So we have an order block, we have a break block, and we have a fair value gap, all below the 50%. So this is all discount. I would say I'm not going to be using this and then look for the 50% of that. No. What I would like to see instead is looking for just the start of this order block. And I'm going to use the candle bodies for this because if you look at this, going from wick to wick, we have quite a range of $3,000. And I don't really like to use that as my order block. If we just connect them, I will use the bodies because it will, if we read it as one order block, it's a well-defined body in a sequence of 1, 2, 3, 4, 5 days, which is basically just one trading week. And it also starts on a Monday till a Friday. But this is just one trading week on the daily, bearish. But I'm going to be using the bodies of all these days as my order block. And it's also behind fair value gaps on the daily, so it makes it a stronger asset or a stronger element. So the start of the order block using the bodies is basically the 50% of this breaker block. Now I want to know what's the so the 0.75 of this current fair value gap, the stance is also inside this breaker. Should Bitcoin drop another $600 to $800 and close the day around here with a down close candle, let's assume it falls below this and it drops $800 from now, like now, that's around here. I use this as my reference point, which brings the 0.75 closer to the equilibrium of the breaker and the start of that order block. So that's something I would like, but Bitcoin really has to fall lower still for that. And not to forget, we have a balanced price range now as well. And see how the end of the balanced price range falls in line with the equilibrium of that breaker and the start of that daily bullish order block. So what if we take these then basically the if we take the quarterly levels of this balanced price range, I'll reverse it because that might be making more sense. We have the first quarter of this range is over here. The 50% is over here. The 75% is the start of this breaker block. So that's another reason why I like this. So we have quite a few things lining up together on the daily chart. So for the sake of simplicity, I'll pick this wick, this upper wick, and I'll mark it down as daily balanced price range fill with daily bullish order block. And consequent encroachment, or the 50% of a bullish breaker on the daily. So that's one level I will have to mark because it lines up with so many things. Just can't ignore it. Better. We have quite a few things. And what I would like to see, let's see what the range expansion is from this move. Right. So the expansion move of 1 to 2, 1 till 2. And I was in lock scale, I don't know why. I'll disregard the 50 or the halves. So we have a standard deviation 2 over here. We have a standard deviation 1 that we already hit. So first target. Then we have our standard deviation 2 over here at 28,888.9. Now, if we look at other levels, that will fill up the entire daily buy-side imbalance, sell-side inefficiency gap, or no, the sell-side imbalance, buy-side inefficiency, the SIBI on the daily, and it would close around 75% of this weekly bearish fair value gap. So that's always a good sign. So what I would like next on Bitcoin is to still give us that retracement lower on a daily level, daily perspective. And then simply look to buy back here on spot or derivatives, whatever you want, at this particular zone. And then look for that last pump up to our standard deviation 2 target. That would be something I would like. Maybe, just maybe, because it has been having this tendency of creating a range, take the lows, take the highs, creating a bigger range, take the lows, take the highs, that we are going to be ranging around here, then take the lows, then go for the highs. Basically just taking this high first. And remember what I just said with dealing range theory, right? We have our new dealing range with the current low, with the current high. What if we just simply range a little bit here, making this like a fake high that's going to be filled later on. Then we take the lows over here in a, what will be an A, B, C move down, or just consolidation, taking the lows, then pump back up, taking the high. When we simultaneously take out key buy side liquidity, we rebalance back inside this range. We hit our, or close to our standard deviation 2 target. And then maybe look for the low. That's something I am going to be looking for right now. And my stop loss would be not this low, because if we already go lower than the 50% of this gap, which is also a balanced price range, then I just want to be out, because then I would be expecting to take the low. So I want to know what the 50% is of this, and that's over here. So that's going to be my stop loss. For this particular spot trade, which is still a 6% stop loss. So in terms of spots, it won't hurt me much. But if you are playing on derivatives, you might want to leverage down to have that minimum risk. And then I'm just going to be looking for this. Well, first I'm going to be looking for the 50% of this. And then maybe, depending how it's going to get here, that last portion. That's going to be my bullish higher time frame plan for now. And why am I doing this, you may ask? Well, if we remember what I said in last stream before all this happened, when we were over here, what do we see over here? And remember, price is fractal. So I was saying if I want to long this, because I was not really sure if this was going to be a high probability setup based on that we were in the midpoint of this particular range and also around the midpoint of this particular range. So I was now going to long over here because I don't really saw the higher probability in my scenario. I was saying if it just took out this low and we run back for this high, what I would like to see is a run up, take this high, then a retracement lower to go back inside this original consolidation, have found support, and then look higher. That's basically what I said when I wanted to go long, and then my stop loss would be around the 50% of this gap, basically, because that would be a balanced price range. If we saw a huge bump up, just bumping straight through this gap, this would be a balanced price range, and then my stop loss would be, if we enter around here, my stop loss would be around the 50%. Well, take this in mind. And look what we have right now. Basically, we still have the same approach with, we took the low, then we took the high, all the highs. Now I want to see a retracement lower to this original consolidation. Because this was the original consolidation, which has that bullish daily breaker. Around here. And I want to see a retracement lower. And look what we have over here. We have a bullish 4-hour order block as well. And the start of that order block is basically the midpoint with all these things. But there's another reason why I would like that. And we would fill the gap, which makes this a balanced price range on the 4-hour as well. So we have a lot of things lining up together. And basically it's the same idea I had over here, but we didn't get. Now we still have an original consolidation, even though it's not really much in fluctuation, it's still an original consolidation. And shorts are here going very good, then they forget to take profit, then the whales, the smart money, pump it like it's Christmas, and now they are all in huge underwater positions. So they want to mitigate those positions, most likely. We have a order block over here that might give us a hint as well. That's why it probably is placed around here. So I want to see that run back down do this original consolidation, that order block, and then I want to see another pump up, making this a very sketchy, very extended 1, 2, 3, 4, maybe 5 move. You can subdivide it in 5 ways on the lower time frame. But yeah, it pretty much looks like one move already. And that's something for the future, basically, because we don't know yet. It's too early to tell if it's going to pump further up to 30k or maybe even higher, or this has already been half the move, basically. We don't know. The only thing I know is that I want to see a little retracement lower to that original consolidation, the order block, and then a continuation up to go for the weekly bearish fair value gap. That's my plan for now on Bitcoin. And that's all I really have to say on the higher time frame. Because on the lower time frame, if we look on the lower time frame, I've mentioned this in a group yesterday to a certain person. It's not going to give you something to ride the wave back up. Really, it really not has given us any opportunity to buy back lower to ride it back up. It's just one pump, consolidation, probably thinking, okay, it's going to go lower, pump back up, no retracement at all, consolidation, probably thinking, oh, a run on buy side liquidity, we might see a little retracement lower and just another pump back up. So it hasn't really given us any clear retracement that we normally would expect. It has just been going up and up and up and up and up, and nothing you could do about it. So that's why I said in a group as well, just accept it. You can't change it. If you didn't enter over here or you didn't enter over here, you missed it and you just have to accept it. So now, new opportunity. As I would like to compound back in my original position is over here at this zone in between 22,600 and 22k even, that particular zone. That's what I would like to see. And that will be a typical ICT breaker move, basically. Because it would fit in the dealing range theory, where we took out the low first, then we go for the high, then we create a new price fractal by taking the high first and then aiming for the low. And if that happens, then we have the dealing range theory with us. We have the very high time frame WXY combination as a wave 4 with us. Then we have probably social media being bullish all around, and everyone and the mother expecting 30, 40, 50k. And that's basically what I mentioned last stream and also in the group with make them bearish, make them extremely bullish, and just create that larger correction with a 3-3-5. And then nuke down, the real nuke down, before going back to business as usual. That's the larger plan that I have in mind, basically. And it starts to look very well. If we remember the stream of, what is it? I have it here. If you guys remember the stream, this is from December last year, the 1st of December, with me expecting this entire move up before that lower move down. I hope you guys can see it all right. With that 3-3-5 move up, where we first take the low, then we take the high as a dealing range. Remember, first taking the low, then expecting a move up. Then we finish that TR pocket, basically. We hit that weekly fair value gap, and then another rundown, because nobody is going to be expecting another rundown when we are going that much up. Everybody is going to be looking for this old consolidation range, basically, or maybe all-time highs if you are really blindfolded. But this has been my plan for months now, for months, and seeing it unfold like perfectly is just satisfaction for me, at least. So this is still my leading plan, unless we take out that high there, which is basically this high. This high is going to be very key for me. If we take out this high, then I'm looking for further up in this whole hill price swing with a bearish order block first, and then looking for taking buy-side liquidity, maybe even the upper high from March last year. Until this high is broken and the move is sustainable and the move indicates a very nice bullish market structure, nothing overextended, then I'm looking for higher. If we fail to break that high and we basically stop at the fair value gap on the weekly, and we see a clear shift in structure on the 4-hour and the daily eventually, then looking for very lower. And I'm expecting that this correction would be over. If you look at it at phases, basically phase 1, if this is going to be a correction, was over here. This was phase 1. Very, very, very frustrating channel going up. I remember it very well. Very frustrating. Then phase 2 was in between here. Way better at first. Very nice, but then another stagnating, slow, choppy price action where I said to myself, crypto can suck it, and I'm going fully into the traditional markets. Then we had that huge FTX collapse, and then eventually smart money collecting the long positions, and now we're going in the final stage. And I believe it will be at around the 3rd week of May or April, sorry. At around here that we see that high form. Because I know with seasonal tendencies, that has been a thing the past 2 years, that Bitcoin is likely to really run lower at around the 2nd week of April into May. That has happened over here in 2021. That has also happened over here, where we go into April and then into the 2nd week of April, which was around here. We consolidate, May hits, and we run way lower. So seasonal wise, that April into May is going to be bearish. At least it has been the case for the past 2 years. So that might be another reason to expect a certain high at around this place, April to May. So those 4 weeks, I'm expecting that high to form if this is indeed a correction before another move down. So that's it for me on Bitcoin. That's what has changed for me. I'm not looking to short anything way lower because clearly pointless. I'm looking for a buyback, compound my position for another run up. That's my plan on Bitcoin. And if we take a look at the dollar index, quick look, we still have all these things lower. So on dollar, nothing really significant change for me, except that we took out equal lows on the 4-hour. Weekly hasn't changed. The weekly profile has not really changed. It's giving us that nice distribution lower. So my target for dollar index is still over here. So that's basically going as planned. The monthly, it's now hovering around the last down close candle on the monthly. It's not a downside close, if you may ask. It's a down close. What do I mean with down close? Basically this. This is the last down close candle before that move up. So I've marked out the upper part of the candle body on the monthly. And it's basically hovering around that start of the monthly candle body. Mean threshold is just the 50% of that monthly. So dollar, nothing really changed, going as we thought it would go. Then on ES, I stated this yesterday because I saw that ICT was mentioning it as well, is if we go to barchart.com, and we look for ES, and we go to ESH or ESM by now. We go to future prices, and I can already see the amount of volume is twice as much as the March contract, which was also the case yesterday. And I read on Twitter that ICT was mentioning, well, the volume is way larger than the March contract, so you should be focusing on June. And as of today, the open interest is also larger than the open interest on the March contract. So from now on, we should all be focusing on the June contract, which has the ticker ESM23. So ES, the letter M for the contract, and then 23 for the year. That is going to be the full ticker of that particular contract. And basically what it means is that ES is going, the March contract is going to be expiring this Friday. And in terms of delivery and booking of price based on open interest and the volume, it's much cleaner on now the June contract. So that's why we should be focusing on the June contract from now on. And if we take a look at ES quick, on the daily, what I'm expecting, we hit this original consolidation. We took our previous day high, so Monday high on the June contract, but we did not take the lower end. No, instead, during the PM session, we pump back up. So for me, that's an indication to go higher at least, because this has been a really bullish move with a very, very clean swing low on the daily. First thing that we should be looking for is this gap, which is a SIBI. Mark down the 50%. I'll have a alert over there, and I'll have an alert over there on the 50%. Because that's the first thing that we can see as short-term premium. And what I mean with short-term premium, well, we have this enormous rundown. That's pretty long-term, or intermediate term at least, because that's been over a month. This current rundown has been over 6 days, almost a week. So this is a short-term price swing. And on the daily, we have a daily fair value gap, bearish fair value gap, just above the 50%. So that's the first thing we should be looking for. We now have relative equal highs. So I'm expecting pretty much to run back here, as we also have filled this 4-hour gap, or at least we traded back inside this 4-hour gap. We got a bullish reaction from it. So first thing for me for the remaining week is to go for relative equal highs back inside this daily inefficiency. And then we still have this bearish order block on the 4-hour. So we might touch that. And the 50% of this gap is at around the fill of the daily. So I would like to have these marked down. I would like to have marked down that one and the 50% of that. So 4-hour bearish order block, 50%. Then we have a daily SIBI. Going to get an alert over there as well. And I'm not expecting lower, really. I'm expecting a run up first here. And if we look from this current swing high on the 4-hour down to this current swing low, and we take an OTE, the OTE is basically filling that daily imbalance. And we might slightly touch that order block, but just wick in it and close below it. And we may as well have an OTE set up to go lower, but I'm expecting this run up first and close at least 50% of that daily gap, and then look further. Basically, we also have a balanced price range over here. We created this displacement candle. We traded back through it, and the 50% is also the 50% of this daily fair value gap. So that's my first go-to on ES, using the June contract. And I think that's about it for tonight. Hope you guys liked it, and I'll see you guys then back later on Friday. And on Friday, I'm going to be covering NASDAQ. and I will look for a comparison specifically between Nasdaq and ES. So if we take a look, Nasdaq is pretty strong in terms of where it is on the charts. Compared to Nasdaq or ES, I mean, we should be utilizing this knowledge as well. Nasdaq has not even taken out this low, while ES was way below it. So ES really ran down way, way, way lower than Nasdaq has. Nasdaq has been relatively strong, and by the looks of it, we first take the low. Now I'm simply expecting to take the high on Nasdaq, which might be enough to go in this particular zone to fill that inefficiency still, because we have traded through it, still that wick, that's basically the volume imbalance. But we still have this part as a sell side imbalance, or sell side imbalance, buy side inefficiency. And that may be enough for ES to go back inside here, this whole particular zone of price action on the 4-hour and the daily before going lower. Because now we have created also relative equal lows. Bear that in mind. We have created relative equal lows. So that might be something for later on in a couple of days, maybe 2 weeks. But yeah, that's going to be it for next stream, comparing Nasdaq with ES predominantly. And that's going to be it for tonight on my stream with Bitcoin and a little peek at S&P. So look at that. That's the exact type of downside that I was looking for. Holy shit. 22 now. So it dropped another $600 from where we were looking at an hour ago. So what I now would like to see is for it to drop back here in this gap and create that down close candle on the daily with an entire wick, and then look further for that consolidation. So I'm going to be placing a alert over there. So I will be notified when this happens. And yeah, like I said, that's going to be it for me tonight on Bitcoin specifically. So I thank you all for your attention. I hope you liked it. I hope you found it insightful. And then I'll see you guys next time on Friday for my stream of the comparison between Nasdaq and S&P. So thank you guys for your attention. Have a wonderful night, wonderful day, and I'll catch you guys on the next stream. So take care and goodbye.